Hello, everyone. Welcome to lesson 7, which today we'll cover breakouts and specifically trades around key levels, breakouts and approaches. Again, my name is Richard Fetchko. I'm the CEO and founder of Altfins, and I would like to thank you for taking time to invest into your education and improving and making yourself a better trader. So let's go ahead and dig into the contents of today's lesson. So today we'll cover, as I mentioned, key level approaches and breakouts. And key levels, as we talked about in the past, support and resistance are really levels where a lot of the action happens. And in almost any strategy that you pick, pullbacks in uptrend, trading in a sideways channel that we talked about in the last lesson, momentum and so forth, you always got to be aware of your support and resistance areas. And the breakouts, that's something that a lot of traders get excited about because it sounds exciting, and that's when big gains typically or can be realized. The breakout strategy is when the price is triggered once the price breaks through a key level, right? A zone. Today we're going to talk about primarily breakouts to the upside through the resistance zone. So we'll be buying coins, but you could also in the future argue, and the same principles apply to the breakouts to the downside through the support zone, especially for coins that are trending down. Breaks through the support zone indicate that the buyers have been overwhelmed by the sellers, and the coin is likely to trend lower from there on to the next lower support level. So the breakouts can be both to the upside through the resistance zone and through the downside through the support level and support zone. We'll talk about a bit about both methods or trading opportunities, which is a key level approach and key level breakout. We'll talk about breakout failures, and that's gonna give us a lot of headaches as we trade, and then also using stop loss to manage our risk. So let's talk first about emerging versus breakouts. And in the next lesson, we'll talk about other patterns where emerging opportunities will arise. But emerging essentially means that when a price is approaching the resistance level, and that's a tradable opportunity as well, particularly if it bounces off of support and now it's turned around and it's approaching. Typically, it approaches and reaches the resistance, at which point it may once again get rejected and go back to the support level, or it will break out, right? But those approaches to the key level, in this case resistance, are also tradable, and we'll look at some examples. And then, of course, you got the breakouts. Once the buyers have soaked up all the supply at a certain level, and are anxious to continue to buy through that level higher, then we get a breakout, and hopefully there is a follow through. But a lot of times it isn't, and that's a failure or a fake out. We'll talk about that as well. But again, emerging and breakouts are both valid opportunities with relatively high success rates. And let's look at let's cover this these bullets as well. So in terms of breakouts, again, what breakout really means in terms of the supply and demand picture in the market is that when the price has approached the resistance level, where in the past we've seen some selling from the market participants, if that selling is now soaked up or satiated, and the buyers are essentially are very anxious and have bought up any kind of pullback, then the buyers at some point push the price above that resistance zone, and that's a breakout that typically is followed through some positive bullish action thereafter. And typically, and that's the second bullet in this presentation, if there is another resistance zone at some distance above the current one that was broken, right, and we'll do that in the Q&A charts quite often. If there's another resistance zone from the past trading activity above this one that was just broken, typically once the lower resistance zone is broken, the price tends to approach and reach the next resistance zone. Now, a lot of times, right now in this bull market, we have coins that are pushing all-time highs, new highs, even Ethereum is. So there isn't a clear resistance zone above us. So that gets a bit trickier as to where to expect that resistance zone to arise. And then we'll talk about how to confirm a breakout. But let's first look at the emerging versus breakout. So on our platform, this is something that our platform does excellently, I'd say, is detect breakouts and emerging patterns. And of course, I'm sure you've come across this on our platform. You can go to the patterns section, and you'll see the patterns on a variety of or 5 different time intervals. So you can change the time interval here. Right now we're on the daily, but you can also look at the 4-hour, 1-hour, and 50-minute time intervals. And again, these principles that we explain in any of these classes or lessons apply to any time interval. It doesn't matter which time interval you're on, the same principles apply. And so let's actually unpack what we're looking at here in this first one, for example. So we've got a trading pattern and it says emerging here. Let me get some drawing tools here. So it's emerging, okay? So it has not broken through the key level yet. Here we indicate which coin it is and which pair. All of the pairs that we evaluate for patterns are USD or USDT pairs. I think that's just easier to understand than something that's trading against Bitcoin or against Ethereum or so on. And then we've got the price, the current price, and what the price has done today. So the price of YFII, this is I think it's a Yearn Finance, is down today 7%. Okay. Now this signal or this pattern was issued and published 15 hours ago. It tells us what type of pattern it is, and it says it's resistance. So it's basically key level resistance. And because it's emerging, it's an approach. It's not a breakout. So and it says so in the text here, approaching resistance level, right? And these daily patterns are updated shortly after midnight. So after each day's close, so meaning each candle close, we update, we scan the coins and we update the patterns and we'll publish them right here. And so these were published 15 hours ago. Now that doesn't mean they're old, they're still valid, very much valid. But it just tells you that they were published 15 hours ago. And we believe, based on the historical sort of patterns and history of the past 9 months, we believe that we identify in this particular case where the resistance zone is, right? It's around $4,763. And what we're saying here is what the signal is telling us, that it bounced off a support area, and now it's approaching the resistance. And then it's a high probability that it will reach this zone or get close to it, or maybe even break through. But right now it's an approaching resistance pattern. And it is very much a tradable opportunity. The one thing I suggest that you do always is when you're looking at it, you click on it and the side panel opens up to give you a real-time chart, right? So as you can see in this chart, this was updated as of close of yesterday. It does not reflect today's action. Okay, so it's good to look at. I mean, in some ways, you basically see that price is down 7% since the close of yesterday. So since that last long green bar, the price is down, and you can see that in the live chart here on the side here. And this so this is helpful to give you a picture of, okay, what's happened since the call or the signal was issued, what's happened to the price since then. You can see that here, and determine, you know, particularly if perhaps the price has gotten already too far and most of the upside has been realized, right? So it's helpful to assess that. In fact, in the next one here, this one already has a profit potential of minus, so clearly not an opportunity to really do anything about, right? If the price pulls back. So this one's already up 15% since the close of yesterday. So essentially, the profit potential has been realized, right? And so if we open up the chart here, I'm sorry, if we open up the live chart, this is Ethereum Classic, ETC. And as you can see, right, the pattern was issued as of yesterday. So as of this candle here, and the call was that it was going to approach the next resistance level, which we predicted to be $60. And it did that. It reached that and actually surpassed it and reached as high as $65. Okay. So this pattern clearly has already achieved its target, and it's going to be removed from the list. Sometimes they're still here. I see a couple that are minuses. So, you know, beware of those that have kind of reached their potential. They will be removed tomorrow, certainly, but sometimes you may see them still in the mix even after they have achieved their potential. And the other thing to keep an eye on, let's go on the next one, Pond. This is also an emerging one, so a key level approach. Here we're saying that 11 cents or 11.5 cents is the resistance level that this is likely to approach. Right now it's at $1. I mean, 10 cents or just under 10 cents. But the other thing to you can look at in the side panel is whether this is in the uptrend in general, because you still prefer to be trading with the trend. And the other thing on the indicators is also you can look at the some of the moving average trends as well, that hopefully are pointing up. And if you want to look at some description or news, perhaps, or events, you can also do that here. But it's always good to confirm, one, what's the latest price action, right? Is there still profit potential that's significant or reasonably big? And am I trading with the trend? Like I said, short term, medium, long term, ideally, at least medium and long term, at least medium term is up. Now, again, these patterns will be refreshed again tomorrow and basically every day. If you are on an hourly, for example, time interval, then these patterns will refresh after each hour, after each candle is closed, which means every hour they're refreshed and updated. Now, even the old ones will be updated if they're still valid. So if we go back, let's say 10 pages back, okay, you'll see that this was an hour and 50. Well, let's go. We got to go back a little more than this. To get some older ones. All right, let's go all the way to the end. Okay, here we go. So we then update the graphs with each hour that passes. So this signal is 3 hours old, channel up signal. The signal is that it has the potential of reaching this forecasted zone. And we can see what's happened so far in the last 3 hours since the call, right? There's a couple of green candles, one red candle, so it hasn't quite gone in that direction just yet. And there's still time. We basically recommend that after about 10 intervals, so if you are on an hourly chart, after most of the targets are reached, if they are going to be reached, they're going to be reached within the 10 intervals. So if you're on an hourly chart, it'll be within 10 hours. If you're on a daily chart, it'll be within 10 days. And after, charts or signals that are older than 10 days are actually removed from the system and shouldn't be traded. But ideally, honestly, you trade the freshest ones typically. Now, some traders prefer to kind of wait for 1 or 2 candles to see, especially with breakouts, if it's a real breakout or a fake out. And we'll get to that in a minute. But getting back to the patterns here. So we're looked at emerging, right? And if I go to the next page, we're going to see some breakouts perhaps. All right. Well, these are now ascending triangle patterns. So let's go ahead and use the filter here on top to say the types we're looking for is resistance, or because we're talking about key levels, key level approaches and key level breakouts. And key levels mean resistance or support. And since we want to be buying coins and not short selling them, we're really interested in the resistance zone, emerging or breakout. So I filtered now everything to show me just resistance related patterns. Okay. And I see some emerging ones and more emerging. And now we also have some breakouts that are a little older, 4 days ago. All right. Now, there may have been some others that have already achieved their target, perhaps, and they're not in here. But this one was issued 4 days ago. It's climbing up there to the targeted area. Oh, this is actually an approach, though. This is a resistance approach, not a breakout. But as you can see, the candles are trending in that direction. But if I just wanted breakout, I could further sort or filter out the results and just say breakouts. And now I only see resistance breakouts. Okay, this one right here, it's almost reached. It has almost reached the target. And as you can see, what is the target? Why is the target where it is? Well, because that's the next resistance level right here. See these two peaks? That tells me there's going to be a lot of selling here, most likely when the price gets there. And so that our system identifies as the likely resistance area. Okay, so it's likely to get here. It may exceed that, but there's going to be a lot of selling around that resistance area. So that's the key level. Well, in this case, it's a key level breakout. Oh, actually, the breakout happened here at around 60 cents, and it's gonna, once you break the lower resistance, then you're likely to reach the next resistance level, which is what it is right here. Okay, so the system essentially follows more or less the theory. It should. It's clearly not always going to quite work out. For example, this pattern right here, also a breakout. The system thought it was going to go to the next resistance level, right? The next resistance level is here, kind of like the recent peak, which is where it's setting the target range. But so far, we haven't gone anywhere. We've gone a little bit of down. It's bounced back up. It hasn't done much. But I just this is partly to help you understand what we're looking at. What's the information? I wanted to unpack the information that we have here around these charts, and also to get you to start using these filters the right way. So again, both emerging and breakouts of resistance zones are valid and solid trading opportunities. In fact, if we go back to the presentation, we actually have an article. There's a link down here on the following slide that you will have made available, but we published the historical patterns success rate. This is based on 9 months of historical data. And obviously we've had a great 9 months, although there has been a pullback in sort of in the summer. So this data in a down market may look different, but in the last 9 months, the success rate of these types of patterns is on the slide. It's also in that article that we published in our blog. And the two patterns that we are discussing today are horizontal resistance emerging, right? This one, and horizontal resistance breakouts. As you can see, they typically have a pretty high level, pretty high success rates. 78%, 72%. I mean, even getting 65, 70% is really, really good. So these are quite simple, and then I think that's why it works. You know, horizontal resistance is very easy to identify visually. A lot of traders base their decisions based on that. And so I think that's why it works. Whereas a lot of other patterns that have slanted support and resistance area lines or zones, those can be seen or interpreted by different traders differently. But a horizontal level of support, a horizontal level of resistance, it's clear if most traders will agree more or less where it is in the chart and trade based on it. And so I think it's partly the simplicity is why it works. The other key levels, obviously support. So that's here. And in terms of support emerging and support breakout, a bit lower success rate, but we're not really concerned about those anyway, because we're not looking at shorting coins right now. We're looking at going long or buying them. And anyways, we're gonna talk about some of the other patterns on this list in the future, basically on Thursday. You can see some have really high, like in inverse head and shoulder, right? That's a bullish pattern, in fact, but it's a very rare pattern. But it works. It really works well. We can see if there are any patterns right now, any reverse head and shoulder patterns right now. So let's look at types. Inverse head and shoulders. Nothing on a daily that was identified. On the 4 hour, nothing. On the 1 hour, nothing. 50 minutes, one. Okay. Yesterday, I saw a few on the 1 hour and the 4 hour, but not today. So these are rare, but when you find them, they are great opportunities because they have very high success rates, but there's not going to be a lot of trades like that. Any case, let's talk about what else? Implementation. So I've already shown one way to find these opportunities basically on the pattern section, right? You can sort this, look for resistance only. You can look for emerging or breakouts or both. And you can also sort by exchange if you're on Binance only, to make sure that you're looking at trading opportunities just for the exchange that you have an account with. All right. Now, the other way of looking at these opportunities is through the screener. If you get a bit more advanced or sophisticated, you can also find these trading patterns on the screener. If you go to the screener, signals and filters, you'll see a section called trading patterns. And here you can once again use the similar filters. For example, we were looking at, right, resistance. Okay. We could say, I only want breakouts, fine. And the good part about using this approach is that we can also add other criteria, such that I want the medium trend to be up. Okay, so make sure that we're trading with the trend. It actually eliminated one pattern, so good. I don't need to spend time with that one if I don't want to be trading against the trend. And I could also put in a minimum market cap, or just save it. Resistance breakout. And then I'll have it under my filters. And I will also, by the way, have it on my signals summary. Any custom filter that you create will appear here on top of your signal summary, right here, resistance breakout. So I can see that on the daily interval, I have 7 coins. On a 4-hour interval, there are 21 coins, and so on and so forth. Okay, and you can create multiple different signal filters. One could be for inverse head and shoulders, breakouts, or and so on, and then they will all appear here. And that way you can click on these links and quickly jump to the results. Right, here they are. And there's a question: is it possible to set exchange as and or? I tried the exchange sort and it only showed one exchange at a time. Right. Yeah, right now, good question. Right now, you can only sort for one exchange at a time. You cannot sort for or include multiple exchanges in your filter. So if you had accounts on Binance and Bitfinex and Kraken, you unfortunately right now, but we're going to fix that. Right now, you're unable to include all of them in your filter, only one of them at a time, but we will fix that. So this is another way of looking for patterns, and the advantage of that again is that you can combine it with other indicators or trends and so on, to help you further filter out the results. And then you can look at the patterns tab here and see what the results are, and see if they're tradable or if you're interested in them. So that's another way of going about it. The third one is curated charts. If you're not familiar with curated charts, then you should start looking at them. If you are, hopefully you will find them helpful. Particularly, I think it's a great learning tool, frankly. So curated charts are essentially technical analyses of about 35 altcoins, more or less somewhere in the top 50 market cap wise, that our own internal analyst team analyzes and updates on a daily basis, or whenever the situation warrants an update, because not every day the situation has changed. But here, you can see the asset symbol, the asset name, and whether the near-term outlook is bullish or bearish or neutral. Most of them currently are bullish, and what the pattern type is, and whether it's emerging or breakout. So if you are looking for resistance breakout, right here, you got Bitcoin. It's a resistance breakout. You click on that, you can take a look at the chart and some of the metrics. Another one here, resistance breakout, Phantom. All right. And you can look at the write-up, what we think about it, what is the next potential upside to, so here it's a break about $3 level and likely to reach 350, which is an all-time high. And you look at the chart, you can look at the chart and see, see what we indicate, perhaps the pattern is, or what the MACD is doing, RSI and volume and so on. So I do think it's actually an area where you can get some solid trading ideas, and two, a place where you can learn a lot from how our team approaches some some of the trading and technical analyses. There's a question: are there plans for creating a mobile app for future? Yes, in fact, we hope to launch the first version in December. Can we omit sideways channels on the other screeners? Omit meaning eliminate, to avoid them. Well, I guess you could say that I don't want anything that's a sideways channel. And then you'll have to precisely put in. Honestly, I haven't done this. I haven't thought about it that way, but yeah, you can do that to say, hey, give me everything but sideways channel. You hate sideways channels, huh? So again, great area great tool to help you learn and frankly trade. So that's the third way of finding these in our platform. Now, and then the last one is just visually identifying the charts yourself. The other tool, or the other thing that I want to emphasize is, particularly when you look at curated charts, but other charts that you find, when you say when you see, for example, approaching resistance, BNB, or BitTorrent approaching resistance or approaching support and so on, right? Use those price alerts to get alerted of when the price reaches that target, or when the price breaks above that target. So in some cases, like the sideways channel, what we're saying here, it's better if I go through the screener. And that way I can blow up the chart, make it bigger. You can also find the curated charts here on the screener, by the way. And let's blow it up here. So this is Algorand. And what we're saying here in the text here is that it's consolidating in the sideways channel. I think you can see that between about $1.75 and $2. It's been doing that for the last month and some, bouncing back and forth. That would have been an interesting opportunity for trading in the range that we talked about in lesson 5 or lesson 6. But we say, okay, wait for price to break above $2.10 with upside to 250. Yeah, that's what we say in the text. All right, well, what are you going to do? Check the chart every day? No, you're going to create an alert to alert you when the price surpasses $2.10, because there is basically a resistance zone, as we indicate here, about $2 to $2.10. And as you can see, there's multiple times when the price had reached about there, right, and then gotten rejected again and again. We'll see. This still looks like a rejection. Maybe we'll get a breakout or not, but it hasn't. It's broken through the $2 level, but it hasn't quite broken through the $2.10 level. And so my point is that to be on top of these opportunities when you see them in the curated chart, just because it's a sideways channel and has broken out. In fact, if you want to be ahead of these charts, it's because we update them on a daily basis, but we may not update them right away when the breakout happens. Then I suggest that you create an alert. So I'll show again how to create a simple price alert by going to the signals and filters, indicating which coin we're talking about, right? Price, we want it to be the last price to be above $2.10. And then and then create a filter out of that. I'll go $2.10. All right, and then you will have it in your alert section, and you will receive, here's the alert that we just created right here, and then we'll receive alert notifications in this area and emails as well, and in the future notifications on our mobile app and Telegram channel. So that's how you use curated charts, is you look at them, but you then find situations that may be right on the verge of breaking out, and you set those price alerts. Sometimes you talk about break through the 200-day moving average as oftentimes a significant event, right? And so, and you can do that as well. You have to say that, let's see. Right off the top of my head, I can't remember which one is approaching the 200-day moving average. But the point being, you can also create an alert, and that typically is a big deal when a coin price breaks through the 200-day moving average. We have that in the lesson notes as well. That that also can be a significant event and a breakout. And so then you can either create that for a specific coin, like right now, Algorand. I already have that selected, and I'm just going to say that price is above or crossed above, or actually you can just say above, it doesn't matter in this case, 200-day moving average. Add filter, right? And then create an alert. Right, so that is also, so use those alerts to stay on top of the market and stay ahead of the price action somewhat, so you can get those breakouts early on your own, particularly if you're using the curated charts. Now, let's see. We talked about using price alerts. Now, one other thing to discuss, if it were all that easy as just trading the breakouts, that would be way too easy. Now, those are typically good opportunities with solid upside, but we're going to get fakeouts, right? So how to enter a breakout is also a bit of an art and a topic for a lot of traders because they have different approaches. And essentially, all comes down to this. It's a trade-off between being very early, having a lot of potential upside, but also trade-off with being early, but having a lot of potential upside, but also with being wrong a lot of times. So the earlier you get on the breakout, the more often you're going to be wrong, but the more often you're also going to have the real potential upside, right? And so there are more perhaps conservative approaches in entry that leave some money on the table potentially, but are safer to enter. So a lot of times when we see breakouts, what is a real breakout and what is not? So there's a few ways to confirm it. Try to improve our chances. One is using the closing price as your filter, meaning as your criteria. So a lot of times a price will break out intraday, right? Do we act on it immediately? You can. I'm trying to think. Well, this is not a breakout, but maybe Cardano. Let's take a look. Right, Cardano. So Cardano's, here we go. Cardano has a resistance zone at $2.50. We're not quite there yet. It's at 230. But point being, coins sometimes break through the resistance zone during the day, intraday, but then close below it, right? Actually, in fact, if we go back to the curated chart, I think we were looking at algo. Yeah, well, let's go back to that. There was actually a breakout, right? Right here. Tiny little bit of that upper wick actually crossed above the $2.10 level. So if I were a total purist, I would be buying that as a breakout. But it didn't close yesterday over that level. As you can see, the body of the candle is below that level, right? Here's the body, here's the high. The high was above, but the body, the closing price, did not close. So that's another filter that traders sometimes use to be a bit more conservative. The more aggressive guys like, hey, it broke through, I'm buying it. But guess what? You know, it broke through here a little bit. It broke through here a little bit. You would have been, we would have been wrong a couple of times already. And so the more conservative approach is to wait for the close, essentially, to see how the price behaves at the end of the day or at the end of the interval. Maybe it's an hour or 4-hour interval, whatever it is, and give it a little more time to mature this breakout, for the breakout to mature, and not to jump on some oddball trade that happened during the day that happened to be really high up. So that's one way of sort of slowing things down and taking a more conservative approach, is to use the close, what they call the close, as a close filter. Now, as I said, you could trade the intraday breakouts, but then you really need tight stops. The other thing is that you really want the breakouts to happen through the resistance zone, and not particular level. So here, this is a zone right here, right? It's not $2 straight, but it really is a zone of $2.10. In fact, we could maybe even extend the zone a little higher to make it $2.12 to include those couple of peaks here where the price reversed. And so what you want to do is really wait for the breakout to happen above that last local peak to confirm that this is most likely a real legitimate breakout. And the other thing with breakouts, a lot of times it helps when they occur on above average volume, right? And when you see big volume, robust breakouts, that indicates the buyers are really anxious and pushing the price. Maybe there's been some news or whatever it is, and that helps also to confirm the breakout as well when it happens on very large volume. Now, the other ways of entering the trade, as I mentioned, and this diagram here on the right-hand side helps us visualize and understand the various approaches. So you could buy right here on the breakout, either an intraday or on the close. Also, you could do what they call the breakout and pullback. So it breaks out, and then typically there's some pullback, maybe not all the way back to the breakout level, but some pullback like here. And so you basically wait for that pullback to basically enter a bit later, not perhaps as low as you would have if you bought it right away, but you also gonna have fewer failures or fake outs when you do that, when you wait basically for a small pullback, or some wait for a pullback all the way to the breakout zone. And then the last approach is a pullback and breakout. So that's even the more conservative approach that leaves more money on the table, so that has less potential upside, but less risk of failures, right? And that's basically waiting for the breakout, no panic, no rush, wait for the pullback, great, and wait for the price to confirm the breakout by breaking above the level where it pulled back, right here, above this level in the red line, right? And that is a confirmation this breakout is real. Now, obviously, I've already given up some of the profit here, but my chances of success are higher and chances of failure breakout are lower. Okay, so these are different approaches. You know, some are more aggressive, some are more gradually more conservative. You know, adopt the ones that feels right to you in terms of the risk reward trade-off. Perhaps start with the more conservative one that gives you a little more time to get involved, and then see how that works out. Now, I also like to do basically multiple a scaling, basically scale my way into the position gradually. So let's just say you're looking at your average position size of being $1,000. Then you could say, well, I'm gonna, you know, a lot of times I'll basically buy it. I'll buy a third of my position somewhere here. Usually I wait for the close, not the intraday. So I usually act on the number 2, which is closing breakout. And then I'll buy it here, maybe not quite at the breakout. I'll buy a third of my position here. Then I'll wait for the break and the pullback. I'll buy the second third of my position here and my third position here. Now, it may happen that I'll never get a pullback and I'm just riding it up with 1/3 of my position. And, you know, maybe I'll never get, you know, the sort of the pullback or I'll get a small pullback and not sufficient enough. So the downside is that I may not participate in this breakout with full position, but I also reduce the risk, right, of being, when I'm wrong, I'm only wrong with 1/3 of my potential size, position size. So that's another sort of risk management technique, is basically scaling into your positions gradually. You know, first on the breakout, maybe on the closing price breakout. You know, you're already involved, you're feeling better, you can sort of relax a bit, and if it keeps going higher, fantastic, you're riding along with it. But then you can you have various ways of scaling into your positions gradually with less and less risk. I wanted to also look at some fake outs, and I came across one today that was just classic, man. So many fake outs. TRX, and we have it actually in our curated charts, so check it out. So as you can see in this chart, but you would have picked up on it yourself very easily because it was obvious. In this case now, support zone, but previously it was a resistance zone, it was around 10 cents. But it's a zone. It's not an exact level. As you can see, it broke above 10 cents here, then pulled back, here, then pulled back. Multiple intraday breakouts and even closings above it and pullbacks. This would have been quite painful if 10 cents was our exact point of, you know, breakout entry. So again, good to wait. And actually, first of all, it's good to realize that after the first one or two of these fake outs, we need to set our zone a bit higher, right? It's not exactly 10 cents. It really is more like 10.5 or 11 cents. Okay. So if we say it's 10.5, that would be right here, right? That captures, sorry, one more time. If I go off of these right here, these peaks, that's about 10 or 10.5 cents or 0.2 1920x1080, and the breakout would have been right here. Now we saw a pullback and the confirmation of the breakout here. So that would have been sort of the most conservative way of entering, which is the last one, the pullback and breakout. If we were to wait for this last one here, right? It broke out here. Then it pulled back, and then it broke above that level again. Oops. Okay, so that's my sort of confirmation of the breakout. And now we think that it's headed for 0.125, so 12.5 cents or so is the next resistance area, which is, again, typically when the resistance zone is broken, then the next resistance zone becomes your target. And the next resistance zone is kind of like typically your local high. Maybe it's not an all-time high. All-time high was somewhere around 16 or 15 cents, but the next resistance zone is most likely right here, and that's our target. Okay, but I wanted to demonstrate how the fake outs complicate the breakout strategy. And so it's good to be more conservative and don't FOMO into a position on the breakout. And if it just keeps going back and never gives you another chance, so be it. I know that Litecoin today and yesterday had a big day or big moves. Check it out. See if we can learn from that. Yeah. So clearly there was, maybe if we move, let's get rid of the histogram. We don't need that. Now. Let's take a look. We find some resistance areas, but clearly this was one, right? These two peaks here around 240 was a resistance. Previous resistance was around $200 right here. And that was broken, and subsequently, very quickly, the $240 resistance was broken. So, I mean, this breakout didn't give us any chance. If we didn't buy it right away, we were not getting involved. There hasn't been a pullback. I mean, this is, a very quick rise, and it happens. So, c'est la vie, it's up to you. You may try to capture these and be more aggressive. You'll have some more frequent failures and fake outs, or you come to peace with missing out on some of these and just being more conservative and buying them on some pullback. Now, the one telling positive sort of sign with this initial breakout here yesterday was the volume, right? The volume was pretty significant here. That was before yesterday. I'm talking about yesterday's candle. Pretty significant volume. But hindsight 2020. Another chart I wanted to take a look at is XRP, Ripple. Ripple has been trading in a sideways channel. It's been trading in the sideways channel between $1 and $1.25, and it's getting close. 125, I believe is right now it's at 125, just under it. So it's right here somewhere. So again, it's one that keep an eye on it. Set your price alerts maybe for just slightly above that 126, 127, because if it does break, it's more than likely gonna approach the next resistance level, which is $1.40, which is about 15% upside. but you know, it's not a breakout quite yet. There was a breakout intraday yesterday, right here, but I wouldn't say it's confirmed yet. Decent volume, but nothing completely totally crazy or out of ordinary. So this could still very well reverse back to its support zone and back into the channel that we've observed. Okay. Another example was, oh yeah, bet chain. See if we can learn from this chart. So here, in fact, if you go to our curated charts, you'll see that we talked about the support zone where previously resistance zone, but once the resistance zone is cleared, it becomes support as 15 cents. And in this case, we got a second chance. Let's go to today's live graph. So 15 cents, or about 16 cents if you include that peak here and even this little peak here, was the real zone, right? Not a specific level, but maybe 15 to 16 cents was the zone. And it did break and close above it a couple of days ago, right here. It pulled back, gave us an opportunity to buy it again, and then it broke out big time, right? And so in this case, the more conservative entry of breakout pullback would have worked quite nicely and been more conservative. Let's take a look at Ethereum. Actually, let's look at Engine. Exciting coin. Been making some big moves on the whole excitement around metaverse. So this one, and again, we have a curated chart on it. So use it. We indicate that in this case, we see a resistance area around $3.50. As you can see, multiple times the price had been rejected at that area. Clearly, that is strong resistance with a lot of selling around it. At the same time, we think that the $3 support zone is a good buying, sort of a buy on the pullback opportunity. Okay, but let's look at the live chart. Well, it's not much different from what we saw in the curated chart. Right, but you know, here it is. So you know, wait for the breakout, or of course you could pull it back, could buy it on the pullback here, but I guess my point is that the fake outs will happen, because if you roll back a couple of days ago, so resistance zone was around 350 based on this candle right here, the red candle, where it shot up really high and then got rejected and closed down on the day. So so then a couple of days later, I would have thought, hey, this is a breakout. Well, it was an intraday breakout, not a close, because it didn't close above that. But if you acted on the intraday breakout, you'd be down from 350 to 3, you know, 15% or so. So again, the intraday breakout is aggressive, it's early, and it can lead to higher frequency of failures and fake outs. So there again, in this case, I'd say more conservative entry at this point would be, right, the high, let's see, the high of this candle right here is $3.62. I'd say I won't consider it as a real breakout until we are above the $3.62. And so that would be, now, personally, I would probably buy some at the $3 sort of pullback because I think it's a beautiful uptrend. It has that metaverse sort of story behind it right now. But maybe I would wait with some of my position for that breakout. And the breakout would not be at 350, but really at 362, right? So you can create a price alert for that level and stay on top of this one as well. Let's look at last one, Ethereum. This has been on the tear as well. And what we said in our curated chart, which you can also take a look at, but we said that 4,400 was sort of the resistance level, which would have been about right here. Oh, let's actually find out exactly. So all right. It was right here. And actually that was the previous all-time high, more or less, if you go back. In any case, so what happened here in terms of the breakout? A couple of days ago, or more than a couple of days ago, a few days ago, we had a close above it right here. Good. I would have put 1/3 of my position on just because it actually closed above, clearly closed above the resistance zone. Then we had a pullback that you could have put another third of the position there. And then it bounced off of that and broke through that local high right here, right? So it confirmed. So that's the first one was breakout closing. The second position was on the breakout pullback. And the third final piece of my position would have been on the pullback breakout, right? When we go back to the entry strategies right here. Right? That's exactly how Ethereum played out. All right, guys, that's all I had for you. Any questions? What alerts would you use to detect the all-time high? Good question. So we do have in the filter an all-time high right here. You could say price is, and actually we're kind of reworking this wording because it's not, I think, that clear, but it says price is 5% or less below all-time high. Okay, I don't think that right now it's actually working. We're fixing this in the next couple of days. We already have it working on the development server, but basically you can use this functionality to detect coins that are very close to the all-time high to help you narrow down those that you can sort of zero in and set some price alerts. The other one is new high. New high was created. So this is not an all-time high, just a local high in the last 30 intervals. So if you're on a daily, okay, so it'll be in the last 30 days. So if you select yes here, you'll see that about 400 coins have in the last 30 days reached a local high. Let's take a look at them. I'm going to also put in a market cap minimum. All right, and we, preferably want to trade with the direction of the trend. All right. So down to about 100. I mean, not surprising. Bitcoin, Ethereum, right? Polkadot. But these are, again, not all-time highs, but local highs. Coins that have made in the last 30 days a new high, or are at the highest level in the last 30 days. Let's rephrase that. That's also a helpful tool, by the way, helpful screen. Glad you asked, right? You can see prices, recent prices are sort of at the highest levels in the last 30 days. So it could be good, good breakout sort of strategies or opportunities. Can we take a look at the trade we did last Thursday? Yeah, absolutely. Good, glad you asked as well. That one unfortunately busted, but it's a good lesson. Not that I would do anything different, but let's open up a new. So yeah, last lesson we did a trade in quant, which was a strategy of trading in a range. Right now, this one did a perfect job on me, to be honest, because remember we had, but that's part of the risk management. We had, so we identified that this was trading in a range of, if I remember correctly, 250 to 325, right? And yeah, you're gonna laugh your butt off, but it was right here is the sort of the support zone, and 325 was the resistance zone that we said that this is where it's trading. And and we can actually see it in the chart right here. If I add my trace to chart right here. So I bought it here at 258 and change. Sweet. I thought it was going to turn around, but guess what? I put, if you remember, I put as a risk management step, I placed a stop limit or a stop order at I want to say it was a 235 or so, right? I can't remember the exact. I could look back in my history, but anyway, so a couple of days later, the price dipped. Let's look at the bigger chart here. You'll see how I got robbed by the market. But hey, that happens. So here, I bought it here. You can see it, right? Again, if you connect your exchange account through the API, you will be able to show your chart and your trades in the chart. And then the price had this strange downwick here below 240, where I put my stop limit. It traded, it got me out of my position, and now it's bound back up. And it's probably going to go back to the resistance level that I thought it was going to go to. Hey, I was trying to be safe, trying to manage my risk. It worked against me. So far, it looks like it worked against me, because it does look like it's respecting that support area of maybe it was 260, 265 or so. And so that's the story of this trade. It didn't work out. Maybe I was too conservative in terms of setting my stop loss, but that will happen. That will happen. Cool. Let's see, any other questions? I think that's it. Ladies and gentlemen, I appreciate your time again. Hopefully you learned something interesting and useful here as well. We'll share these notes within your education section area. And we'll see you on Thursday, where we'll talk about some other pattern trading strategies. Good luck trading and have a wonderful Tuesday. Cheers, everyone.